war in Ukraine is escalating. This is a finance channel, so let's look at how this can impact markets. Remember that history doesn't predict future performance. There was a breakout for gold prices at the start of the war, but it has been falling since. In the late 70s, geopolitical instability in the Middle East caused a sharp increase in gold prices too. This was also followed by gold returning to close to pre-war levels. Little tends to happen when the war talk turns into actual war, and we can expect the same cycle to play out if other countries enter the conflict. It sounds good that Bitcoin is digital gold, but in practice, Bitcoin correlates with the stock market and all other cryptos correlate with Bitcoin. Next. The S&P 500 could largely weather the direct effects of conflicts in the past. Today, negative effects are mostly caused by the US stopping with stimulus checks after COVID and the Fed raising interest rates. In the weeks following Russia's invasion, the S&P fell by 7%, but this was mainly caused by fears about sanctions. Pre-war uncertainty tends to cause the US stocks to drop, but the outbreak tends to calm them. But what types of stocks do benefit from wars? Defense and to a certain degree energy companies. This conflict mostly causes issues in the EU because they are or were the primary buyers of Russian gas. Interestingly, Gazprom had a record-breaking earnings report for the first half of this year because the price of gas skyrocketed then. The Russian state owns nearly 50% of Gazprom, so this is fueling their war. Gas needs serious infrastructure to be transported, so developing new markets is not that easy. EU countries were their biggest buyers for oil too. However, with the increased price, they can circumvent sanctions by offering discounts to countries like India and China. These oil and gas prices mean that poor countries can't afford them, so they have to turn back to coal, which increases the demand and therefore the price of coal too. Countries at war tend to use their fiat money printing rights to inflate their currencies away. As bonds have a fixed rate of return, they tend to underperform in inflationary times. According to the IMF, the worst disruptions to grain and fertilizer flows are causing the worst food crisis since 2008. Russia and Ukraine export a third of the world's wheat and barley and 70% of sunflower oil. Developing countries will have to empty their reserves, causing even higher demand and pushing up the price. Subscribe to learn more and earn more.